2021 had an amazing year with the S&P 500 up 22% year to date, and if you combine that with the last 5 years, it's up over 100%. But will 2022 have the same results? Let's talk about it. I'm Jay Jones, and this is Jonesing for Stocks, where we talk about personal finances and stock market news. For many of you in 2021, it may have been your first year investing, so it's important you get the right information to make future decisions. In this video, I'm going to break down some 2022 investment strategies that I'll be using and some additional information that you should look out for. And if that interests you, don't forget to like and subscribe the video so I can continue making content like this. The 2021 stock market saw a massive growth with the tech sector and other growth stocks leading the way. So it's important to understand why this is the case. Shortly after the pandemic in 2020, the Federal Reserve increased their money supply in the market, and they also lowered their interest rates for the banks. With interest rates near a bottom, this made the cost of borrowing money for banks and individuals at an all-time low. In fact, the only other time interest rates were near this low was after the 2008 housing crisis. But specifically for the stock market, some brokerages allow margin rates as low as less than 1%, meaning many were able to double their purchasing power effective immediately. So with more money and lower rates, you can see how this caused an influx in the stock market. And this allowed prices of stocks and the market to go higher and higher. And most of this money was pushed by the tech sector, leading the way of the S&P. Also, there was a record number of IPOs this year, with over 1,000 new companies hitting the market, most seeming to have rumored overvaluations, causing an additional growth in the system. And if you finally mix that with all the new additional retail investors that were added to the market, you can see how this could create a fresh source of money and resources. It seemed like there was nothing that could stop this massive run-up that the stock market was having. That was until earlier this year, the Federal Reserve Chairman Jerome Powell announced that they begin federal tapering starting in November 2021. And this federal tapering refers to the reduction of purchasing of assets in the market. But in their most recent December 15th conference, he stated that they will be doubling their tapering efforts. This has analysts confused over the future outlook on how this can affect the market, with clearer certainty short-term. However, there's unclear certainty long-term. Fortunately, he announced that during this meeting, they don't plan on increased rates until 2022 with a target of 0.9%. Both of these factors can lead to a negative effect in the market as investors are expecting a decreasing of funds and increasing rates. So you can see how there can be a domino effect in play, with the expected future increase rates, which can have a direct effect on margin rates, which will have a direct effect on how much people put in the market. So you can see with all of these factors in play, near the end of 21, there was a shift from growth into value. The higher gains of growth stocks came with an increased risk, which was accepted in the low interest climate. But as investors expected the risk to increase in 2022, they've been moving their money and hoping to still remain in the market while still out of range for inflation. Value stocks are companies that have a fundamental intrinsic value like cash flow, profit, and earnings. Watch my older video about the rising rate of inflation and where I go over some value stocks that may be least affected. So with all of the unknowns leading into 2022, my investment strategy is just increasing my dollar cost averaging into solid companies with strong financials and in solid index funds. That way I'm still exposed in the stock market, but I'm increasing my level of safety in strong companies and index funds. Now, all this news doesn't mean there's going to be an impending crash on the market, as no one can predict the future. But it does mean that there are more factors in play for 2022 than there were in the past years. So from federal tapering, increased interest rates, and increased inflation, you may ask yourself, how should you invest in 2022? And the best thing that you can do as an investor is invest wisely. And that doesn't mean to FOMO in on the next meme stock or meme coin, but to make sure you keep a diversified portfolio to minimize your future risks. And where you put your money depends on your financial standing. Can you afford to risk your money in a high risk return portfolio? Or should you just dollar cost average in a solid index fund, which is the Warren Buffett recommendation during times like this? The main point comes down to making sure you're only risking what you're willing to lose and making smart decisions for your portfolio. Let me know what stocks you plan on buying and what investment strategies you plan on using for 2022. And if you like this video, don't forget to like and subscribe so I can continue to make content like this and you can get the notifications.